Holy smokes, everyone. Right now, the markets are entering into complete turmoil. Just as it looked like there was nothing that could stop this global market melt up and this huge bull run, we've just had a huge spanner thrown in the works. And I'm also going to go over this is all happening right after China has sent a chilling warning to the world, and they are preparing for this global market meltdown scenario, and they're also preparing for a possible Armageddon-like scenario. But people, unlike other financial crises, this crisis that is going on right now, the Fed and central banks around the world are powerless to stop it. So let's not waste any time, everyone. Let's get straight into the news, the facts, and the data on what's going on right now in the global markets and with China, because things are getting worse by the week. Okay, now first things first, the biggest thing we got to talk about is the markets entering into turmoil today. Today, the Dow Jones Industrial lost about 900 points. This was the biggest crash since June of 2020 last year, when we had all the chaos going on around the COVID fears. But fast forward about 18 months later, when we thought that everything was over, the markets were thinking there's no more fears about the situation that's going on with the illness. They thought it was all good. Everything was going to go back to normal. Well, again, it seems like it just keeps coming back up with these new variants that are coming out. That's what's causing the big concern today. We're seeing oil absolutely completely tanked around 12%. It fell to below $70 a barrel. We also saw a huge flight to safety, with yields on the 10-year US Treasury tanking about 16 basis points. So yields dropped to around 1.48%. Gold also rallied early on, but then even gold started to sell off a bit, but it still did close the day up around 0.5%. So it still did increase a little bit, but when you factor in stocks were down around 2.5%, in real terms, you would be about 3% better off today by holding gold than holding stocks. So that's why it's good to always have a bit of gold in your portfolio as insurance for days like today. And also the S&P 500 fell around 2.2%, with the Nasdaq down around 2.2% as well. So this all happened right after the World Health Organization officials announced on Thursday that there's this new variant going around. Now, I'm not a doctor. I'm not going to get into the variant or any of the specifics. Speak to your doctor about that. I'm just going to go over purely what's happening with the economic side of this, and also how this is affecting the markets. And so this is coming out of South Africa, and of course a lot of countries, they're shutting the borders again. And just to pretty much paraphrase, they're saying this is much worse than the Delta variant. But what's even worse is when we have a look at the global markets, specifically the European markets, they got smashed much harder, falling around 3.7% on average. And also earlier on in the day, the Asia markets, they tumbled as well, with the Nikkei down around 2.5% and Hong Kong down around 2.67%. And here in Australia, the ASX fell around 1.7% as well. But these markets closed a lot earlier, and we'll see what happens with these markets on Monday now that we've got more news out. And of course, all the travel stocks, all the oil stocks, and also the banks got hit much harder, with some of the travel stocks down over 10%. And if we have a quick look at crypto, of course, just like whenever the stock market tumbles, crypto falls a lot more than that. If, for example, the S&P falls around 2%, normally what I see is the cryptocurrency markets, Bitcoin specifically, normally falls about 3 times more, of 6% plus. But today, Bitcoin hit a low of around 53,600, down over 8%, and Ethereum down much more, down around 10%. But those are the facts of what happened today. But the question is, will it get worse? How much more can it fall, and what other risks are building up, and can the central banks prevent the stock market crash getting worse? Well, first things first, what we have to talk about, and what I've been covering extensively on the channel, is what's happening in China. Because people have been warning what's going on with this Evergrande situation. That's just the tip of the iceberg. There's so much rotten debt, so much shadow debt going on in China. A lot of the economic figures that are coming out of China, they can't be trusted, but even the official figures are much worse than they've ever been before. And so, like I said, with Evergrande, what's happening right now, it's not over. And this is really just the beginning, because look at what's happening now, everyone. China's property crackdown sinks its economic growth to 90s levels. So that's right, China, the economic miracle that's been booming the past 3 decades, its growth is now come to a halt. And even though while you look at the economic predictions of 4 or 5% GDP growth next year, it seems like every month the GDP growth is being slashed dramatically. And this is actually slow growth for China. But the big thing is China has what's really fueled global growth. And if China starts to slow down, this is going to affect global economic growth, and we're going to feel it everywhere. And also with Xi, the everything crackdown, just when you thought it looked like, he was finished, he wasn't going to crack down on any other industries, what's happened with the Chinese officials lately is they've now asked Diddy to request to remove themselves of the New York Stock Exchange, to delist. And this was announced before all this COVID information. And that's also what sent markets tumbling a bit as well, seeing that the everything crackdown from China still isn't over. And also what I've been talking about is China's crazy housing market bubble. Again, $62 trillion bubble, much bigger than the housing bubble in 2008. People seem to have forgotten about this, but listen to this, everyone. So economists are coming to realize that the Communist Party, the top decision-making body, was serious when it vowed this year not to use property sector to stimulate the economy as they did following past downturns. So officials say excess supply of housing is a threat to economic stability and want investment to go towards prioritized sectors like the high-tech manufacturing rather than more apartments. So we're seeing here, unlike countries in the West, whenever the housing market falls 1%, they quickly go to throw money on it. They quickly go to bail out all the banks. Giants continue to say, no, we're not going to bail out the housing market. We're going to let it go down because we want to actually invest in things that actually produce things and make things. And, that's what we should really be doing here in the West as well. But no, we seem to be relying more on consumption and really producing fiat currencies and financial products rather than real goods and services. And something else I was talking about as well, which is going to have huge consequences for China, is the bond market. The bond market is continuing to completely collapse, specifically the junk bond market in China, and yields have now hit 25%. And what this means is all these companies, they're not going to be able to afford to repay these crazy yields. So we saw the risk of maybe Evergrande defaulting. And like I said, that was just a tip of the iceberg. We're going to see an avalanche of companies start to default in 2022 in China. And if the credit market blows up in China, again, this could cause global contagion and cause global financial market chaos. And this is all happening while we've got a new variant thrown in the works. We don't know if there's going to be more lockdowns. This is also happening when the Federal Reserve has said if inflation continues to go hotter, they said they will actually lift interest rates, and markets are now pricing in 3 interest rate rises next year. So really, with inflation at these levels, can the Federal Reserve, if the market crashes 20-30% because of these fears, what's going on with this new variant, can they say, okay, we'll print $1 trillion a month? Because remember, whatever they did the last market crash, there's something called a law of diminishing returns, and they pretty much have to do 10 times more money printing in order to get the same result. But we saw what record money printing in 2020 and in 2021 did to inflation this year and to your purchasing power. And so what would happen this market crash is they'd have to print trillions and trillions every month, and that would really just be the end for the dollar, and that would just mean inflation would go to pretty much hyperinflation and the currency would collapse. So they can't really do that, and they're really in a pickle here, and this is really checkmate for the central banks because the so-called job market is recovering. They had record low initial jobless claims down to 1969 levels, and they've also got record high inflation. And what is the Federal Reserve's mandate? Stable prices and full employment. Well, they've more than hit both of those. There's a lot of issues still going on with the job market. That's nothing really the Federal Reserve can do with, the great resignation. But they're continuing to say, yep, don't worry, we will do something one day. But I don't know what they're waiting for, maybe 10 to 20% inflation for them to actually do something. But that's not all, everyone. Now I'm going to go over 2 new alarming trends that's happening in China right now. So have a look at this, everybody. This is a very, very important indicator. This is China's credit impulse year-on-year change. And what can we see here, everybody? This is the effect that this housing market downturn is having on credit in China. We can see here on the chart, it has fallen down to 2010 levels or 2011 levels right after the global financial crisis. So while they're saying everything is fine, we're seeing people aren't going out there. They're not buying these crazy apartments off the plan, before they're built. People aren't going out there taking on debt. They're not consuming. And this is going to mean that the powerhouse for global growth is going to continue to fall. And so while this is all happening, something that I don't think I've heard anyone talk about, and I'm going to go over specifically the economics and the market side of this, is China's warning of Armageddon. And the Armageddon-like scenario they're warned about, or more their CCP spoke pieces, or anyone that really, asks these people that are, speaking on behalf of the CCP, they're talking about the scenario is if China does go to take Taiwan, because they're all talking about a reunification of China. And really the Armageddon-like scenario would be if they go to take Taiwan, then the US and Australia has to step in to save democracy, because Taiwan is a democracy. And the worst case scenario is this turns into World War III, and we have the world's two biggest superpowers go head to head. And with all the new technologies, all the modern warfares, this really would lead to an Armageddon-like scenario. And remember, these are the two biggest trading partners economically in the world. And what do you think would happen to the markets if this, worst case scenario, which I do hope it never comes. I don't think anybody wants this scenario to ever come, but I do think it is a good idea just to prepare as a backup, because there are people coming out to saying that this scenario is becoming more and more likely every year, with the tensions rising in the region. But okay, everybody, what does this mean for you and me in simple terms? What this means is the pandemic that we all want to be over, it's not over yet. There's still huge risk with that, and that's something that the central banks can't fix. Also, just simply, the markets are completely overvalued, which I've gone over before with the Warren Buffett indicator, with the price to earnings indicator, with records amount of margin debt in the system. And also, this has been the longest bull run in history. We've been on a bull run since the lows of 2009. Normally, stock markets go in cycles of 7 to 10 years. So we are overdue for a big downturn. And I'm talking about a prolonged downturn. We've had dips of 20% during this bull run, but then they've just been brought up straight away. We had the huge market crash last year of 40%, but again, that was just brought up straight away. But I think the next market dip, it's not going to recover for at least a couple of years, because simply the central banks don't have tool or ammunition to fight it, with interest rates already at low and already printing the currency into extinction. And again, simply what's happening with China is their economy is coming to a halt, so the world can't rely on China to fuel economic growth anymore. And there are huge tensions rising between China, the US, and Australia and Taiwan. That is also risks for global stability as well. But everyone, that was just some of my thoughts and opinions, what's going on in the markets right now. I apologize for no videos over the past couple of weeks. Again, there's been a lot going on for me in the background personally. And also, like I said, I've already put out the warnings of what's going to come. I don't want to keep, repeating myself like some other YouTubers. They put out a warning and then they'll just say the same thing again 7 times a week. I wanted to put out the warning there, give people time to prepare, and then come to you again when we have some new huge news and some new important data to talk about. For all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.